everybody, welcome back to another video. In this video I wanted to talk about stocks that I am buying in this November. Now, as of right now, there is no president chosen. There's still a lot of uncertainty and stuff. However, these decisions I'm making are not based on who's the president. I mean, yes, there's some correlation between, if there's a president, maybe how much exposure I'm going to have in the company or how much more I want to buy. I feel like I said exposure very awkwardly. Exposure. Anyway, I'm just going to talk about some companies that I really think are good, not good values, but I think they're just great companies, and if they are at a value in the month of November, I will be buying them. The first one, we're looking at the SPY right now, but we're not really going to do too much technical analysis. These are all monthly candles, we're looking at major time frames. Look at KL. I've been following this company for a few months, no, actually a few quarters. I guess they've been only publicly traded since 2015 August, and since then they're up about 2,000%. This is a gold miner. Actually, let's go to their Yahoo sheet. We'll just read their Yahoo portfolio. Kirkland Gold engaged in acquisition, exploration, development of operational and gold properties. They have Fosterville mine located in state of Victoria in Australia. Muscasa mine in Ontario. Kirkland Lake, Ontario, Canada. My bad, I'm dumb. Muscasa mines in Ontario, Canada. Strategic agreement. They also work with Newmont, so I own Newmont as well. And they have other stuff in Canada. Yep. Okay. So basically, again, they acquire, explore, and develop mines for gold purposes. What makes this company so amazing is, let's just go to their first of all, the business model. My theory for what's gonna happen these next few years is just gold is gonna increase in price. I'm not one of those people to say, oh, it's gonna increase by like 5,000%. No, I think it's just gonna increase in price, and I want to buy companies that are benefiting off of this increase in price. Simple as that. Okay, Yahoo Finance is making you pay for basic information, I guess. I mean, I understand it's a business, but let's go to some other good website. Or on StockRow. I love this website. Great. Let's go to there. I want to show you guys their balance sheet. We'll look at quarterly balance sheet. This didn't get updated. Okay. We're looking at June 2020. However, they did just release earnings. If anyone's interested, I did discuss very in-depthly their entire thing. Balance sheet. Why do they not have the balance sheet somewhere? Let me try something else. Okay, once again, real quick, I do a full video where we break down their entire earnings notes. I'm gonna do something real quick. 1 second. Okay. Here's their 10K. I think no 6K. This is gonna have the balance sheet on. I didn't actually look at this, but I want to get the most up-to-date information. Balance sheet. Okay, we found it. Let's go, baby. I didn't look at this yet, so this is gonna be the first time. However, I want to point something out that we got our highlighters on. Am I able to highlight this? No. Okay. Current assets. Total current assets about 1 million. Or is that billion? No, yeah, this is billion. As opposed to last year, December, beginning of the year, 800 million about. But I want to really bring in, or show you guys, where's the debt? Am I stupid? What's happening? They have so little debt, it's crazy. Okay, they don't blatantly just say debt. However, we can just take a look at their liabilities and compare it with their assets. I guess we can just look at the equity. I guess this would be equity, shareholder equity, 3.5 million. Oh my god, wait, that increased so much since last year. their total assets compared to their liabilities, they're not leveraged at all. They have like no debt. They're a gold mining company. That's no debt. Like, think about that. That's crazy because you need to do a lot of things to, research, explore the mine, buy equipment to extract the product. It costs a lot of money. However, they have no debt. It's almost a little sketchy, but it's really good. They're also growing. Right now, their market cap. Let's go back to I think Yahoo Finance. They're sitting at like 13.5 billion market cap. They have so much room to grow. They are also already paying a dividend, and they can pay one, just because how much money in cash they're gaining. As opposed to NEM, I think NEM is like 55 now billion. So yeah, 54 billion. They have room to grow. Kirkland Gold, and again, they're still a relatively new company. We can go back to NEM. Remember, 2015 is kind of when they, I guess, started to be publicly traded. So, go to NEM. NEM's been around since like the 80s. At least the information that I have, probably before that. And they've obviously been through a lot of cyclical stuff, whatever. But Kirkland Gold, again, has no debt. They start paying a dividend really soon because of how much cash they're generating. One thing why I'm buying specifically now is because, there are many reasons why I'm buying this company. Some of the reasons why they have good management. They're good with debt. They can manage the company. They keep increasing a dividend at such a relatively small company size, buy back shares, strengthening their just position and stock and making it valuable by, not diluting it. This is one of their new mines, Detour Lake. The acquisition of January 31st, 2020 this year added 15 million ounces about. They do mention it, hold on. Representing 41% of the company's total free cash flow. Obviously, there's an asterisk, it's a non-GAAP measurement and something else. For year-to-date 2020, so since this mine became operational, 40% of their company's total free cash flow came just from this mine that they just opened. That's crazy. Think about the long-term profitability of the mine. Obviously, it might not produce as much later down the road, but at the same time, bro, that's crazy just to have that amount of cash coming from one mine that you just purchased in 1 year. This basically increased, this is a bad measurement, but increased their almost revenue by 40% just from that one mine. Again, that's not accurate to say that, but it's kind of a way of thinking about it. So this will continue to reap rewards in the long run, and I'm happy that they purchased that mine. Again, I think I'm talking too much about this company, but if anyone actually wants to hear more, I got a video. They're growing mine. They have no debt. They are taking on making good decisions and buying mines that are going to bring them revenue. I don't see anything bad. I do see some bad aspects of the company, but there's so many more good ones. Price range we can talk about real quick. Man, 34, 43 bucks is a buy. I don't think it's getting there. Anything below like 51, so maybe like 48 for me. I think 48 bucks. I want to buy it. Probably just gonna ride up standard deviation zones. Next up is kind of really basic one. It's 3M. Right now I think dividends like 3.6, 3.5 starting. Just a good company. There's not much to talk about. People talk about this to like oblivion, right? They got good products. They do, one thing I dislike is they're taking on more and more debt. Not a fan of that, but again, the type of market we're in, and with, again, low rates, I think companies just see that as an opportunity. So again, they're smarter than me. I don't like them taking on debt, but I see reasons why they might. I don't think we're going to break out of this technical channel yet. I think we need to see some kind of lower level, maybe 150, I don't know. But if it does break out, then it's a good sign. Earnings, what are earnings? They already had earnings. I think I looked at earnings, but their earnings sheet, maybe not. But yeah, good company. It's just solid. It's very stable. They've been paying dividends for, 100 years or something like that. Don't quote me on that. Actually, it's been like 100 years, maybe like 90. It's very safe. But that's also one reason why I don't really like it. I'm not expecting my money to appreciate appreciate in value. This is just to keep it. And if I make money off of some trade or just in the world, and I'm like, I really want to keep this. I get a 3.5% yield. That's great. I'm gonna buy this. However, Kirkland Gold, I want some appreciation. I want some more growth, and I want to be rewarded for making that decision. I guess lastly, Exxon Mobil. I know a lot of people dislike this company, dislike whatever oil and gas. I don't see oil and gas going away anytime soon. I think as long as Exxon Mobil has like 2 or 3 quarters left, before I start getting really worried they're going to cut the dividend. The decisions they're making, I think they're doing the best that they can to help the investor, and I don't know if that's necessarily the best decision to make. If that makes sense. Like, I don't think I want to buy a company knowing that they're taking on more debt to finance paying a dividend. Now, they didn't say that they were taking on any more debt in their latest earnings report. They basically said that they took on debt just because they could. Like, it was so cheap. The government was handing out freebies and stuff, and why not take on that debt? Anyone would. The market still doesn't think they're going to pay the dividend. It's at 10.5% maybe now. They did bounce a little off earnings. These are 5-week time frame. And man, 10% yield on your money, and they've been paying the dividend I think for 37 years, consecutively raising it. This is the first year that they have not raised it, for obvious reasons. I actually thought they were gonna raise it like 1 penny, just to like prove a point, but they didn't. I don't, technical wise, if this falls below 30, like, man, that's gonna be I don't even know where it's gonna fall, because 30 is a technical level back from the dot-com, like, or '02 in 1997, 98. Like, as a historical low, this ain't gonna probably go lower, unless they cut the dividend, then it will 100% gonna drop. But even if they cut the dividend by like 50%, like, it's still 5% yield. But again, that's a bad way of thinking about it. I kind of just think I think it's a good cyclical buy play in hopes that the economy and oil prices need to recover and demand needs to recover. ExxonMobil's getting hit by both sides of that, and that's bad. That's scary because that's their business. If your demand isn't there and your prices are down, your whole business model's like destroyed, or not business model, but like the profit margin is destroyed. I did an analysis on the company further, just about, again, more technical wise, reading over their press release and just stuff like that. But I think it's a pretty good company to buy. Is there some risks? Yeah, there's risks with every company. However, I think for me, in my life, the money that I can lose in this, I can make back in some time. However, the money that I can gain, I can have a 10% yield for like 10 years, let's say. That's insane. I think in the 20-30 year time frame, I expect oil and gas to, hopefully slow down. Hopefully we'd use more renewable energy, but I just don't see this going away anytime soon. It's just a cyclical play. Anyone who thinks this is like that could be down, suppressed forever, I just don't think they see the full picture. That's just my opinion. My time horizon on this again is like 3 to like 10 years as a dividend play. Anything right now, anything right in this price, anything below $40 or $30, I think is a great play. Again, in 2 or 3 quarters, hopefully the economy recovers. If it does not, and oil and gas or oil demand and prices are still low, I don't think they're gonna make it. I think they're gonna cut it. They have to. There's no reason to keep that, But again, that's a kind of riskier dividend play that I am speculating on. I don't even know if it's speculation, but I guess everything is some sort of speculation. AG, man, they had earnings too. They did really well. If you guys like the tech or electric car space, silver is used a lot in the batteries, in the solar panels, or I guess electric or renewable energy space. You need silver to do it. It's I guess very conductive metal. I think is it the opposite? No, I think it's conductive. It doesn't matter. It's just used in the. They had great earnings. I did an analysis on that as well. I mean, if they break out of this huge trend line, I thought they were gonna break it. To be honest, I thought the momentum was there, and I was wrong, and I got pooped, got slapped. But I added down here with the AG First Majestic Silver. They're silver miners, or the silver mining company. They have a couple mines in like Mexico and stuff. I think one in Australia too, or something. I don't really remember, but I know they definitely have some in Mexico. And they produce some gold, but like 70% of the revenue comes from silver specifically. And I like this company because the CEO is smart. He understands his business. Wow, that's a big jump. And what was I gonna say? I like this specific company because of how it's being managed by the CEO, I guess. That's what I'm trying to say. He's smart, he knows his products, and one of the big decisions he made back during the pandemic crash, he didn't sell his silver. Because he was like, why am I gonna sell silver at like $7 to $10 when I know it's not worth that? And he ended up, because he did that, he made a lot, or the company made a lot more money this quarter and last quarter, just based on that decision. So he took a hit knowing that he would make more money later on, and yeah, the stock price is kind of reflecting that now. I think again, silver is very undervalued in relation to gold. I think it was XAU, the index. This was not XAU, I think. I don't know. Anyway, whatever it is, the rate. If I think gold is going up, silver will also go up as well. It's just how the ratio kind of works, and there's some discrepancies. However, from a historical level, we are above where it should be. So if we're looking at like standard deviation lines, we're like up here. So, and we've been up here for a while. So eventually, it's kind of like a cyclical thing. You might see this over a couple hundred, like a couple of decades, So, in my opinion, the ratio is gonna close. So I think right now we're at like a 1 in 90. So every 90 ounces of silver buys 1 ounce of gold. Historically, it's about 60. So I think we're gonna go back to some of those levels. Can I be wrong? Yeah, of course. But I'm not gonna bet on that, especially how things are moving in the economy, especially the uncertainty in the money printing, or the uncertainty just in general, and the money printing is big. Just stuff like that. Obviously, I'm a little biased towards the metals, but I just see such a good opportunity right now that I want to keep adding to those positions at value buying points. Technical level to buy AG, I already have. I'm like kind of high up. I'm like 1220 because I'm dumb and I added all the way up here because I thought it was gonna break out. But I continually add it down here. I want to see a retest right now at $11. Will it? I don't know. But I think $11 is a good price range. But again, it's I don't like AG as much as KL. KL right now is my big boy play. I think this is a great company. It's got growth. It's got everything I want or I desire in a company. So I'll be adding. Anyway, I think we discussed the stock that that sounds cool. I think we discussed the stocks that I'm buying enough. Yeah. Thanks for watching. Let me know what stocks you're